Hi, everyone, and welcome back to another episode of Unlocking Venture Capital. I'm here today with my good friend Miriam Dong. Hi, Miriam.
Hey, Sydney.
So, Miriam is also at a family office fund in Canada, and Miriam would love to learn a little bit about what you guys invest in and what your focus is.
Yeah, absolutely. So we are focused on early stage, pre-seed to seed. We are pretty industry agnostic, but with a focus more on the B2B side, software enterprise, and with a sweet spot actually around the dev tools, product-led focus.
Awesome. And so, I haven't had a lot of people that were from family office funds, so would love to kind of learn about what your perspectives is and also what people are asking you. So people ask me these things all the time. Do you guys do LP investments? Because it is this market that it is. And then also, what is the difference between a family office fund and a traditional VC institutional fund? And so would love to hear your take, and I'll let you know what my answers have been.
Yeah, a fair question. I got asked a lot too. But no, we don't do LPs. We are a small family office. We like to do direct investment. And that way, we not only we kind of have a bit more of skin in the game, as well as we have a little bit more control. And also the carry interests, which we don't feel like to pay for it. And yeah, second is very different. First of all, we have a little bit more freedom in terms of reporting. We don't have to have like we don't have institution LP, so there's isn't really like a format we have to report in a certain way. That really gave us a lot of freedom. Second is because now it's a family office, actually a single LP. It's a little better with the managing the relationship and such. Um, to be said, you know, family office they are not as sophisticated to be like very fully transparent as some of the institution LPs. So they do need a lot of like hand holding and also really walk them through a lot of nuance around why this investment, not the others, why this is our focus. So yeah, there's a lot of like kind of a hand holding perspective as well.
Yeah, absolutely. I have found that actually for our family office fund, like we can't go into the round unless there is a lead, even if it's like a safe round or things like that, because the level of due diligence that institutional VC funds do and everything like that is a little bit different. And
Mhm.
and then we also emulate that, but we have to only hand it into a single LP. And then for me, I just get it right back. I don't know what the actual notes actually are sometimes. One really interesting thing is that for the family office funds, so I actually recently got into the Venture Alliance in New York, which is really great. So it focuses on a lot of diversity and inclusion. And so they actually didn't have a lot of family office funds. And one of the things that I think we were the first family office fund to get in. So one of the interesting things they asked were like, how come your fund doesn't have a website? And I was like, a lot of family office funds don't have websites. It's like, that is a thing because they are very private people. And so to explain like who they are, what they do, why they're investing in these sectors was like always such an uphill battle for me because I'm like, I've tried for 4.5 years to get them to put up a website and it never has. I have a friend of mine in Israel. He got them to put up a website after 2.5 years of asking. So that was like a whole other thing too. So privacy as opposed to VC marketing and branding was so different. And so that's
Mhm.
also like another layer of being super opaque when it comes to family office. Were these things that have you ever found challenging where like, either other institutions or other startups were just kind of handing you a bunch of random things because you don't have the same kind of marketing and branding flexibility as other VC funds?
Yeah, VC like industry itself is really good at marketing, right? Like most, and like you said, like a lot of people actually try to ask me, "Hey, where is it from? Who is it?" So like, I don't really think I can tell you that.
Yeah.
But just it's a small, micro VC fund, and been investing for a while, and that's all I can tell you. Like, yeah, I don't know what, like, I'm happy to, be more, um, do more marketing around it, but it's just not the way it works. Yeah, you're absolutely right.
Yeah, and they also just run very, very differently. So for our family office fund, everyone is a partner and we have to contribute to the fund. Is it the same way in terms of yours? And then are you allowed to also like hire interns or associates or anybody else? Or how does that work in terms of the structure of your fund?
Yeah, so we do, well, every like GP needed to have some skin in the game, right? So it is pretty typical that they ask you to have to also have some investment in it. And
Mhm.
yes, I do. And I mean, in terms of like hiring, it is, I had an intern for a very brief period of 2 months. Didn't work out.
Yeah.
Yeah, it didn't work out. So I think it's just better. Also, like, I'm pretty new to the industry, and also I think it's best for me to take care of it, to learn the whole process, and also to interact with the founder better, because a lot of times interns, I mean, they also have like a million things on the go, and they're probably not really have the empathy of the founder. They, founder are really busy. You
Yeah.
really need to, kind of give them the time and the focus they needed. And yeah, sometimes they just don't get it. And I feel like, maybe in the future, we will have open up for positions, but not right now. Yeah, I have a like system now, works well, and it works well so far. Yeah. Mhm.
I love that. And because we are both based in Canada and can invest elsewhere as well, in Canada, for the most part, you're always dealing with first-time founders. And so that is always like a unique kind of roller coaster on its own. So I was, wondering in terms of the founders, because you're right, they are so busy, and first-time founders are terrible at asking for help. How do you help someone who is terrible at asking for help, whether they be your portfolio companies or you're on their advisory board or whatnot, right? Like, how do you kind of provide that extra value that you want to give?
Yeah, great question. I always tell them the reason why we got into this, this game is because when I was a founder, I took money probation take,
Yeah.
and the VC, the investor, got pretty demanding
Mhm.
and quite micromanaging, and I didn't like that.
That's a good lesson.
Yeah, so I didn't like that. I want to, if I invest in you, I have to trust you to be able to be resourceful and
Yeah.
then make the right decision, good for the business. So our approach is quite hands off, unless they really ask for help.
Mhm.
So, but on the other note, we do, occasionally getting some sort of resources and share with the founders, share with the portfolio companies. Especially like now, I have one founder actually ask me, "Hey, do you guys like what payroll software is good to use?" I was like, you know what? That's a good question. Let me go this like do some research, and then I actually got some deals. For example, we get like a rippling for half like 6 months, everything for free, and then and from there I actually got them even more deals. So all those things is really critical, right? When you're early, especially we invest in early stage. When you're early, every dollar counts,
Yeah,
and and also like there's so many options. It's almost like you once you open the Pandora box and you just don't know what to do. So this actually helped them to navigate a little bit better. So again, we don't we don't want to like influence them too much on their choice, but yeah, whatever we can help, we're always there. Mhm.
that's really great. And you're right. Like when you are a founder, you're so incredibly busy and every dollar does count. And so when it comes to like right now, it's such a bad market. And so there are, of course, first time founders that are looking to see, like, should I take money from here? What does this mean? Should I just get money from anywhere? So I was actually judging a pitch competition for a seed stage accelerator. Okay. So they're out in the New York State area. And it was really interesting because I saw a Series B company pitch. for a seed stage accelerator. So money is so finite. It is available, but it's just kind of like, how does this fit? And where are we going with this? So taking money from the wrong types of investors is definitely something that founders should choose, because should know about, because they can't really choose for them to leave. This is going to be such a long-term relationship, and even if you do a recapitalization or things like that, it
Mhm.
will still give you a lot of trouble as you're investing and finding investments in the future. And so, have you had those kinds of scenarios where you're like, you know what, these are lessons I learned as a founder, and these are things that I want to make sure that other people are aware of and are learning from, because at the end of the day, future generations should always get better, not worse.
Yeah, that's why we are more advanced than other animals, because we can learn from each other, right? The mistakes all the time. Actually, I really wish I know what I know when I was a founder, when I was fundraising. And I always very transparent, communicate to the other founder I talk to, really understand like what money is cheap, right? Money is like, it's just money, it's dollar value. It's I mean, yes, we're not really in the best environment right now, but there's still tons of money around. As long as you have, good business model, you're good, great as a founder. Like I don't think there's a problem as raising money. You really need to understand who you're willing to put on your cap table,
Yeah,
and who you're taking money from. What is their fund investment thesis? What is their vintage? Are they fund one, fund two? And what stage are they at with their fund? Are they thinking of raising their next fund soon? How many portfolio companies they already had? And what's the performance with their existing portfolio companies?
yeah,
What is their expectation with when they want to see a return? They're all really, really important in, are in determining like if you guys actually align with your own like interests and expectations. This is just so critical. Do your research, or even just ask. I think a lot of times founders are so stuck into, I need to raise money, I need to
yeah,
just say
yeah,
a check, right? But forgot to think, ask those really critical questions. And really, those are you, like I've seen, we've all seen like a good great founders get pushed out by the board at
yeah,
a certain stage, right? And then the company become like totally different. And that's sad. I mean, really trying to understand, even sometimes, sometimes the founder doesn't want to be a big company or over, I don't know, $2,000 or 2,000 people CEO. That is fine. Also communicate with whoever, on your board. So this is where I feel like I'm comfortable with leaving, but not before, right? It's
yeah.
all like critical in your when you scale up. Yeah, I hope really founders do just open up and ask more questions. Really, I think a lot of VC are very transparent, but you just need to ask.
Yeah, absolutely. And I think that um, it shows that they are not just looking for any capital if they're actually asking any follow-up questions. So that's also really important, because you kind of have to see it like a two-way interview, right?
Mhm.
So, speaking that it's not like such a great market right now, as a founder and as an investor, how do you kind of see preferential shares? So that is coming into play a lot more from my observation. It's not something that I, as an investor, have signed before, just because the lead investor never signed it. So why would we? And so, but coming into play is because they're like not sure if the money's going to come back, and they're not sure if they're going to be raising their next fund, or when that's going to be, right? Because it's so important that founders understand where money really came from in the first place. And so that's kind of why they're slapping, these kinds of clauses. So as a former founder and as an investor, how are you seeing preferential shares, and to what magnitude and extent?
Yeah, I think in Canada, we still haven't seen a lot.
That's true.
Yeah, and especially we as a founder, we also don't lead, we follow, we only follow. So we never sign any of that. But I've heard stories that it is definitely something that it's a lot of like deals you will see more often than than usual because of the environment. But I think it's probably just really concentrated in probably US. In Canada, I still it's pretty like regular terms in play. Like, you know, I maybe in the later stage you will see it, but again, it doesn't really come into play in the later stage anyways. So yeah.
Well, I mean, not here. There's not a lot of later stage.
Exactly.
But yeah, no, for sure. And then also the later stage funds are in a bad market, having a harder time to fundraise because their check sizes were already so big. So they would have to fundraise a ton more than earlier stage funds, right? But the earlier stage funds, you know, how do you as an investor and how do I as an investor actually help them get to that next stage when there are fewer and fewer growth or mid-stage funds now than there were, you know, years ago. So, you know, what are you seeing in terms of the climate? What would you advise startups that already raised like an angel round or a pre-seed or a seed round? Like, where do you go now? Do you re-raise an angel round, but at Series A level? Have you seen those kinds of things?
I've seen a lot of down like
Down rounds, yeah.
down rounds.
Yeah.
Just because, you know, a few years ago was the valuation like it's kind of crazy. It's not
Yeah.
really realistic. It's not really like sustainable, but that's just what the market is. And they were able to raise money with a crazy valuation. But now, you know, the market back to I wouldn't say like, but I actually think it's back normal. It can't really stay that way. Yeah, they have hard time raising the next round. They have to do a down round, which is unfortunate, right? Like then, like what about the previous investors, right? Like what about it's really hurt their you know their valuation and their stake in in the fundraising process. But but I what I think is still actually good business, good startups at Series A or beyond stage are quite competitive. If you actually hate where you should be at the Series A stage, I I don't think you a lot of time you have a lot of a problem raising from Series A. Like the I've seen a lot of it just among VCs, right? It was like, yeah, you know what? We actually couldn't get a spot. We couldn't even participate in some of those companies that are raising Series A, and that's why a lot of times, this you know the later stage fund they also become LP of the early stage fund so that they have access, preferential like access later on. So I mean, I guess it's always a dilemma for a lot of companies. They couldn't even they have to do a down round, but a lot of companies they have they oversubscribed.
Yeah,
Yeah.
absolutely, absolutely. And so like it's so interesting that you know you are now able to go into other access and rounds of things like that that would have otherwise been really really difficult just a few years ago, not even that long ago. And so
Yeah.
yeah, in terms of the family office fund, have you had experience or go into things like secondary market deals because of the way that the market is now, or those pre-IPO deals? So pre-IPO deals meaning like just before they go to IPO, not just like in general. And so those kinds of rounds I've also found to be fairly interesting because they are lower risk in general, but how you're evaluating it will be so different than what you do normally on a day-to-day as an early stage investor anyway. But like you said, because the market conditions have like flopped upside down, both of these options now become much more available to earlier funds.
Yeah. I mean, secondary market is very active now. It's a lot more active than I think I've seen like for quite a while, a long
Yeah.
time. I think it is because you know a lot of times the fund couldn't you know they need liquidity, right? Like it's really a way of thinking to get a liquidity or to get a kind of a return. We just start actually the fund is pretty new. We started last year, so we haven't really participated in the secondary yet. Also, as a fund, we don't as one of the beauty of a family office, we actually don't really have the pressure of you know you have to have a you know give
Okay.
us a return in a certain yeah.
That's
So we're a little bit they're a little bit more patient. we have a little bit of more room than, with the institution LP on our back. But yeah, really is look into the secondary market. It is definitely more a calculated risk, and give you a bit more, just more opportunity for liquidation events. Pre-IPOs, I always think is very interesting. Yeah, it is not a very good market for IPO right now.
There were just not a lot of IPOs in general.
Yeah, or exactly, because it's not really a good time for them to IPO. Like it won't get the, the kind of the return they're looking for. Then you probably should wait. And I think IPO market might come back like soon, like not soon, but I don't like in a while. But that's really put a lot of pressure to those pre-IPO like activities, because when the market is hot, of course, like yeah, everyone will jump in like without even thinking about it. But but right now, I think everyone just kind of wait and see what's going to look like, what's coming. Everyone's more cautious, especially I think in Canada, where we're just naturally more conservative.
Yeah.
Yeah.
Yeah, no, absolutely. It's also a lot cheaper to IPO in the TXX than it is in New York Stock Exchange. So
Yeah.
we're all about finding good deals.
Yeah, exactly. It's about good deals.
Because one thing that I wish that I understood about how the market works and how shares and everything work is that it's less about how the output is, because you have so much less control of that, but it is a lot about what your input is, right? So where you go in, what timing, at what valuation and when, and those kinds of things, and why that is a lot more important, because it puts so much pressure into where that output is going to be, a lot of which you cannot control, where the market is going, what competitors are coming in, those kinds of things. Those are a lot of things that you just can't really control these days. So I completely agree that it's still very, very shaky the way that things are.
Yeah, I mean, especially early stage, right? There's just so many influencing play, but that's why we call it a very risky business. And but a high risk, high return. That's the nature of venture capitalists, right?
Oh,
Mm-hmm.
absolutely. And also why it's the riskiest like asset class to invest in. As glamorous as it seems. So you and I have both participated in being the chapter lead for Women in Venture Capital. There are now a ton of very inclusive DEI related and just organizations for different kinds of VCs. So what would you say were your like biggest learnings from this role in this position that you've participated in, and do you encourage other young, new in their career people to go into these different organizations, because there are a ton and it is hard to differentiate when you're new.
Yeah, I always like, actually, funny enough, I was talking to another like a mutual friend yesterday, because he really want to get into the VC space. The first thing I said is, really think twice before getting into, like, really think
People
about it.
always say that, but they give you no specifics.
Yeah, I mean, it looks really glamorous, like you said, right? Like it's, oh, you're an investor, like you get it to with all those interesting startups. It is not really as glamorous as it
Yeah,
looks,
yeah,
especially if you have to like, go through, analyst, associate, like the traditional route. It's always your fault. You pass on a good deal. Yeah, you screwed it up, right? But you didn't. But if you brought a deal that is not a mediocre deal, or they just don't think is worth it, right? It's also your fault. The founder is never happy with you because either you introduce them to your partner, or even you invest or not invest, or not, or the term, like they're never happy with you. And even the industry is also like somehow the bad environment, the good environment is somehow it's always your fault. So really, you have to have almost like a founder's like resilience and the passion to be in this industry to survive.
yeah.
There's, I would say, money is is not bad, but it's you can make a lot more money with other industries.
Doing
So
so
really,
many other things. Yeah.
so really think twice before you come in. But if you're really passionate about it and you really love, work with founders, I think there's no other more rewarding job than to be a VC, to be honest, because
Yeah.
you really contributed to the most advanced or innovative space, and it's the backbone of our whole economy of innovation, right? Um, I think this is especially as a woman,
Mhm.
it's still a very male-dominated industry, just like all the other financial industries.
Yeah.
It is a little bit harder, but find an ally, find a champion, find a groups like a woman in VC, right? Like really find even a mentor to understand what kind of challenges they have faced and
Yeah.
ask for help. I think it's really just come down to ask for help, really understand the industry, um, the the path that there's traditional path, there's non-traditional path. I've seen a lot of non-traditional path, like people like I think you and I both are not really like typical traditional path that go to VC. And you know what? It's just hard, especially when you start small. There's definitely discrimination. I actually put up a post on LinkedIn, like there's discrimination around it, because we don't have a glorious tracking history, right? We don't have a tracking record. We don't have some like IPO logo on the back of our on back to show off. Like it is difficult, but I think it's getting better, especially with those supporting system in place. And I thought actually it's just happened to minority or non-traditional background. But I was reading a book. It's called, I think, called Finding Genius.
Okay.
It's a quite interesting book, and looks like even the biggest fund when they just started, they experienced exactly same discrimination when they started for the past 10 years. And now I forgot which fund, I think it's S16 or something. Now they become one of the largest or most reputable logo in the VC industry. But when they first started, they have the exactly same experience. So don't feel like you're alone. It's just, I mean, it shouldn't be like that,
Yeah.
but we'll all just have to deal with it. Mm-hmm.
You know what I found is so interesting where like because our industry is so tiny and is so small, it's kind of like being in a classroom with only like 10 people and you're like, Joe is doing something wrong. And then like nine other people will be like, well, Joe is right there, you know? And so
Yeah.
it feels very odd because the industry is so small that there's a part that always feels a little bit isolating when you are trying to stand up for yourself and when you are working on building something that is really, really great, right? Because in other industries, you can just kind of move around. That's easier said than done, but you can actually just move around. Whereas in this industry, if you want to stay in it, there's kind of like all these unspoken rules that I have
Mm-hmm.
had a really, really difficult and isolated time navigating myself. Like, how are you dealing with LPs that are this ist to you, you know, and that are treating people of these kinds of classes in these ways? What are you doing about it? Do you just leave? And then like how are you dealing with like fundraising for the next fund and then dealing with probably the same kinds of people all over again and then dealing with certain kinds of founders or partners or other VCs or things like that. But when it comes to such a tiny industry, I have I have felt my fair share of these kinds of issues where I'm like, I don't really know where to turn now, and that is a very interesting factor that I wish I knew about more because I was like, oh, lots of great opportunity, lots of great startups. But a lot of your job really isn't about the startup.
Mm-hmm.
And a lot of your interactions isn't even with the startups that I wish it was.
Yeah, absolutely right. I mean, it's startup is just one part
Right,
of
yeah.
your job, and
Some
the day
GPs
to
never
day.
talk to startups.
Yes,
They
yeah,
only do fundraising and they only do management. They only do co-investment.
Yeah, absolutely. And also, if you're on the operation side, like really understand, are you more passionate about operation, right? Or you're more passionate about um on the like a strategy side, or yeah, it's all there's all kind of different roles, or like marketing. Maybe you really VC is really good at marketing. Maybe there's something that you fit in better. Yeah. Mhm.
Yeah, no, absolutely. So I'm really glad that, you keep putting your voice out there because I think that it makes other people like feel like they can too one day, even in a small market and even in any way that makes things better for hopefully, like I said, the next generation of founders as well as investors.
Yeah, this is, I think we as a like VC is very similar as a founder. Like a lot of times I feel like there's misunderstanding or miscommunication between founder and VC, right? But if you actually think just like a founder, it's almost the same. We need to raise money. We have an LP's answer to.
Yeah.
We have like they're only looking at those KPIs, right? Like similar, like we look at a fund, startup, those are the KPIs. And we have to navigate a lot of things that like a founder need to navigate too, like building as just like building a business.
Yeah.
Who do you hire? What kind of a role they should take? And they're, how are they ready to take the next level? Like it's all those, I mean, come to the basics, it's all basically all the same. It's just you really need to have that resilience and resourcefulness, and then really have a trust, confidence in yourself.
Yeah.
Otherwise, yeah, it's hard. Like you said, small industry.
Yeah. Hopefully only gets bigger and better over time. Um, so thank you everyone for joining me on another episode of Unlocking Venture Capital. And thank you, Miriam, for being a guest.
Yeah, thanks for having me. This is fun. Yeah, I really appreciate you doing this, because I think this is really give us like different people a voice, and also let other people really to hear the truth.
Yeah, absolutely. I'm so happy that you're here.
Yeah, thanks for having me. Yeah.